Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Monday. It is the 11th of April, 2022. We're about 6:45 p.m. Central Time. Tomorrow we're going to get the CPI number. It's expected to be hot on a month-over-month basis. 1.1% increase is the guesstimate. They're expecting core CPI up 0.5 percentage point, about the same that it was in February. We're going to hear all kinds of talk. It's going higher, or this is it. It's peaking. You can see what's going on. I can tell you the headline in Chicago on the local news is falling gasoline prices. How long that'll last, I don't know. But I can tell you that you've seen a peak in some of the energy complex. You're down almost 25-30% from the peak that you made. It's hard to believe, but that you are. What else? As I look at the financial markets, it just becomes evident. As we were going up, I was out here feeling like I was all by myself, saying this market is not going to make new all-time highs on that run. I don't know that down the road, a year from now, what it'll do. I'm not saying that. That run that we had last month, I said no. I held to my horses, if you will. And I still believe that. What else? I also brought up to you the idea that on this break that you're getting, it's often met by a rally in the second part of the month. Why? Well, it has to do with select dates of seasonals. It has to do with the fact that if you take a look at history doesn't predict the future, by the way, but history is a guide to what happened. And out of the past 25 years, April's ended up with a gain, 20 out of the 25 years. Okay. And you're breaking hard. That gives the market a chance to get a rally. Now, from where April 1st was to where April 29th, 30th is, well, now we got to keep our eye on that. Is it strong enough to put on a gain? If it is, I think it's a single-digit gain if it can eke it out. If it's a loss, it joins that other school where it didn't do it. That's the point. Number 2, or 3 on the parade. You've got to look where your Bollinger Bands are. The Bollinger Bands are an idea that the market, if it's not embedded, is running into a support zone that other people simply don't pay attention to. So let's go to the chart action. First thing, what we did is we rallied up, and when you were doing this, do you recall people, the press, are we going up to this high? Every TV show that I'm looking at, and I watch them all. I got TV banks, I got everything. I'm looking at them, are we going to take out that high? And I'm going there. The background isn't right for that. This is a reaction in the market. I felt even more under threat that week, it gained again, and now the market's starting to roll itself over. Okay, I feel better. I still say you're not going there. I then looked at this market and I started writing a week ago today. I created a report that said, what I've just said to you, how the month of April for the S&P, just the S&P, I'm not talking the Dow, the NASDAQ, the Russell, just this market has historically done. In the meantime, the market has been breaking down. As it's breaking down, I'm the first to tell you, this is the swing line, a study I created, and as you can see, you've got pattern of lower highs, lower lows. That is a bear pattern. Where's the market in relation to moving averages? It fought a battle for 1, 2, 3, 4 days, actually, in this range. And today the market snuck its head and went, what's below me? And this is what the market is doing. So all this resistance is now above the market. Where was the market on April 1st? Just to get an idea, because I don't even remember that. The market finished out at 45.01 and a quarter. So if you're going to get a gain out of this month, you've got to get up in this market, and it's a tall task. I'm telling you, that's a tall task. Nearly, 85 points from here? That's a big number. So some event would have to happen to do that. I don't see the event on the horizon. Now that Philadelphia is putting on masks, that's a problem. The only thing that could happen is something we don't see. It's not going to be Ukraine. They brought in this butcher of a general to do more damage in Russia. So it could be China throwing more money at the economy. Could the U.S. doing something? I don't know what it's going to be. And it doesn't have to happen. Maybe you just don't get the rally this year. Has there been any reason that you think it's so far to join the report I put out? For me, absolutely not. I'm the guy that created it. I'm still going to pay attention, not to just throwing a dart, what day do I come in? I need a reason. I think the reason's going to give the guys that want to try a number, they're going to come in against the Bollinger Band or in this general area, and they're going to do this. Cross their fingers and say, if it grabs hold, the odds are it's not going to stay under the Bollinger Band because you're not embedded. So that's the first spot I'm seeing. I am not telling you to buy. I'm not telling you not to buy. I'm telling you what I'm suspecting in the market. When I come to the NASDAQ, you're there. What is the importance of a Bollinger Band? The importance is if you learn how to work with it in these areas, you're not getting suckered into getting short under them. You're covering if you're short in any way. And if it's going up, you're coming out against the upper band. The NASDAQ hasn't hit an upper band going back at the beginning in December. You got to go back there, not in January. So it's telling you there's weakness. And what market typically gets punished when this occurs? On high interest rates. The NASDAQ. These are the interest rate sensitive stocks, so the main theory goes in the market, they're under pressure. What market's tied to that at this point in time? Bitcoin. I don't know why, I don't care why, but the correlation is immense right now between these two markets. Do your own study, you'll see. Then I come over to the Dow. Okay, oversold. I'm going to go with the same story. I think that market's looking for support, not a buy signal. Reasons to be out of shorts right there. A lot of resistance. The 200, the 100, the 18-day average of closes. Then I come to the Russell. I have all kinds of reasons to not be short anymore. You're at the lower band. Each time you've done that, you've bounced away from it. So I'll let the next guy make the money. If the market can embed, then I'll join the parade. I'm willing to give up between here and if the market embeds, is how I teach trading. In the VIX, the market came back from the depths of hell. You do remember, I had drawn a big blue line down here, for those of you that are regular watchers, tying the bottoms right here, and I'm going, I don't see how this market can get through those numbers, or even frankly, go for them. Not in this environment, but don't know. Well, as it turns out, the key was, when did you lose the embedded reading? And it starts losing it right here, and that market then came alive to the upside. I don't think it has a big ways to go before it runs into resistance at the upper Bollinger Band. So I'm looking for this market as what it's doing. Notice how the bands are narrowing in to go nowhere soon. That nowhere soon could take pressure off the downside in the S&P. I'm just pointing out things that I'm seeing because I put out that report. Bearish as can be in the 10-year note. This is the gorilla glue trade. This is when the market's locked down on it. If you take the enhanced Bollinger Band course that I'll talk about right after this, you learn the set of rules to how to place orders if you're going to go short off the rallies here. Okay, I'm not going to teach you those rules in this update. In the dollar index, you're overbought, trying to decide if you're going to embed, just the way I told you on the other market. This is where the pros come out of this market, in my opinion, for the look-see. Are we going to embed, or is this where the market's peaking out? I'll come in after I see the event that occurs. Got it? So as I said, if you want to learn these techniques, it's really crucial that you at least understand what a Bollinger Band is, and from there, let me give you your doctorate degree in it. Watch this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever. but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.